purpose-driven organization. Since 1922, we've been celebrating life, but our purpose is celebrating life every day, everywhere. And celebration means many things like we are doing this morning. But I think we've also been consistent since 1922. And as I stand here today, I think the world and NSC, Frank, and your team and the regulators, I think CMA, you or NSC, I think combined, and Treasury, I think you reward consistency, clarity, and courage. And all those qualities are connected to what I've said about our purpose and about the culture we drive in the organization.
It's really a pleasure for me to be back here for the NSC for yet another milestone moment in EABL's long-standing relationship with Kenya's capital markets. It certainly shows our confidence in the NSC and the various players. It's been 4 years since the last appearance here for listing of the previous tranche of the medium-term note program. 4 years in which, as a company, EABL has grown, strengthened, and emerged even more ambitious in how we deploy capital to create value. On behalf of the board of directors of EABL, allow me to begin by expressing our deep appreciation to all our investors. The strong participation and oversubscription, as has been mentioned, of this tranche of our MTN program is a clear vote of confidence in EABL's strategy, governance, and performance outlook.
A great day to celebrate a successful issuer, a functioning market platform, and the cumulative work of committed stakeholders who are determined to continue to deepen our country's capital markets. Looking at this from the authority's vantage point, corporate bond issuances of this scale matter for three major reasons. First, they expand financing choices for businesses. They provide longer-term investment opportunities for savers and contribute to the development of a resilient market with an effective price discovery mechanism. As more high-quality corporate paper is issued, the market gains in depth, liquidity, and credibility. These are all essential ingredients of a mature liquid capital market. So, ladies and gentlemen, corporate debt markets are large and growing. Regionally, ladies and gentlemen, Africa capital markets are at different stages of development, with Kenya remaining one of the most active and diversified markets on the continent, with growing bond activity, an expanding product suite, and an active community of institutional investors and intermediaries. As a country, we have witnessed remarkable momentum in our capital markets this year, as exemplified by, firstly, in July 2025, we witnessed the Lindsay Finco trust issuance of an infrastructure asset-backed security valued at approximately 44.7 billion cash shillings to finance the development of Talanta Sports City. Two, the significant increase in total assets under management by our collective investment schemes, amounting to 680 billion Kenya shillings at the end of the third quarter of this year. As of November 2025, the bond market turnover stood at approximately 2 trillion, marking a 30% increase from the full year turnover of 1.54 trillion in the year 2024. It's also noteworthy that Safaricom has received regulatory approval to issue 40 billion cash shillings green bond issuance that will also be listed at NSC. One may ask, so what are capital markets industry strategic approach, even as we get into the future? Ladies and gentlemen, the industry strategic approach revolves around, among others, one, market development through engagement, product uptake facilitation, and redress of emerging challenges to meet different financing needs and investor preferences that can be met. 2, maintaining and even improving market integrity for improved stakeholder protection through robust policy and regulatory reforms to ensure appropriate enduring safeguards for all our capital markets players. 3, facilitating continuous innovation to cover new subsector areas, for instance, virtual assets, commodities, including carbon markets, and ESG-aligned products and services. So in closing, EABL successful return to bond market, raising over 16.7 billion Kenya shillings in the first tranche at a highly competitive rate is sufficient evidence that our capital markets are deep enough to absorb even bigger issuances.
On behalf of the ABSA Group, I'd really like to take this opportunity to, express our gratitude and appreciation for being given the role to be a partner in this process. This has really been a successful landmark medium-term note. We note that it has elicited a lot of interest from a large spectrum of investors, and the oversubscription that was achieved, I think for us is really, really great testament of the success and the anchor who has led this process in terms of providing an opportunity for investors to come and expand what in our view has been a big hunger for alternative asset classes away from the traditional, fixed income instruments and equities markets which have been available.